Hello everyone, this week's focus is Dow Jones. So right now the market is sitting at a very interesting level. After everything we've seen with the war and the volatility around it, price has actually come back to retest that broken uptrend channel on the higher time frame. And this is key because what used to act as support is now being tested as resistance. But what stands out to me is how we got here. That recovery from the lows wasn't messy or weak. It was actually quite structured and controlled. And usually when you see that kind of move, it tells you there's real demand coming in, not just short covering or positioning, getting cleaned up. Now, when we zoom in a bit, the shorter term structure is still holding. You can clearly see that we've shifted back into a higher highs, higher lows environment, with price trading within that rising channel again. Even the gap area held pretty well, which adds to the idea that buyers are stepping in on dips. So technically the market wants to move higher, but now it's facing the real test. And the test is coming from earnings. Over the next 7 days, we've got key Dow components reporting, names like PepsiCo, United Health Group, IBM, and Boeing. And this is important because these are the kind of companies that directly shape Dow direction and broader market sentiment. So if these numbers come in strong, especially on guidance, that could reinforce this recovery and help push the Dow back toward that prior uptrend structure. But if we start to see pressure, whether it's demand slowing, margins tightening, or cautious outlooks, then suddenly this retest becomes a rejection and the market could roll over from here. So this is really the setup. We're at a technical decision point with a recovery that looks real, but now needs fundamental confirmation. And that's what makes this week so important.